And we're recording. So I'd like to welcome everybody to the um, third installment of our workshop series that we've been doing quarterly. We are looking to follow the 5+1 book, The Entrepreneur's Formula for Success. This was written by Chaz Wilson, the CEO of Master Networks. And we've been going along with the curriculum, and we had our thinking workshop back in the summer. The next one we had was targeting back in November, I believe. And now we're into the tracking discipline. And who better than to have, both Mr. Jim Sandler and the three wonderful speakers that we're having to help us. And these are members of your Master Networks region. So what I'm hoping that you'll get something out of it as far as tracking, and you'll be able to work on that. But I hope that you'll also get a greater appreciation for these three, really four, with Jim's help here. They're passionate about what they do and how they can they can connect and help you in your business. So that's our whole strategy here. So I'm going to turn it over to Mr. Jim Sandler. You may have heard the story, but listen to it again. And that was Jim came about 5 years ago. I think it was even maybe going on 6 now. And when I started Master Networks here, and Jim said, "What is this? How can I help?" I mean, and to me, that was everything. If you could remember, imagine I had probably less than, maybe I had 50 people or maybe less than 100 people in Master Networks. We now, by the way, have over 400. So this is really rocking and rolling. But because of Jim's, being one of became my friend, my support. And I said to him, listen, take over and just be the training.
Please, my stories continue.
Oh, Annette, I'm just gonna mute you. So what he took on was the training and education. And then as we developed over time, and we have this great advisory group now, Jim is he's the training and education advisor. It was a no-brainer. And just want to say thank you to Jim. He's also the owner and founder of KM Consulting, and that's his business. And he brings it. He's also a professor at Rockland Community College of entrepreneurship. So he's bringing the next generation into the fold, so to speak, into this crazy world of entrepreneurship. So leave it to you, Jim. Thank you very much. I appreciate it.
Thank you, Tina. Welcome, everybody. First of all, Tina's underplaying what she's done. I mean, she walked six years ago. She was walking the streets of Westchester County, asking if people would join this crazy group. And as she said, it's now at over 400 people. So, I mean, definitely kudos to Tina. And she has assembled a great group of people who are here, and an advisory board of terrific people who are very competent in what they do. Today, we're here to talk about tracking. And we have three terrific speakers. We have Austin James, we have Vivian London-Crooks, and we have Julia Moore. And they are going to speak about their areas of expertise. Just as a brief introduction, what you don't measure and write down, because you have to write it down, it doesn't exist. Okay? You have to measure it, you got to write it down. If you don't do it, it doesn't exist. So our first speaker today is going to be Austin James. I'd like to welcome him. He's a certified personal finance consultant and financial educational instructor focused on helping individuals gain control of their personal finances. So without further ado, I'd like to welcome Austin James.
In light of what happened last year, are you in debt? Are you struggling to save money? Are you having the challenge of rebuilding your credit? Well, if you are, then this discussion is laid out to show you exactly why you're in that current situation. And we're going to apply that using this 5-step, easy to follow framework. And what we're also going to prove is that if we can take care of home, if we can manage our personal finances effectively, then we will also be able to manage our business finances effectively. So first things first, on the personal side, let's take that first. Step one is our income. We need to know how much money we are bringing in month to month. We need to know what our net income is, because if we don't know what our income is, everything else is a completely moot point. It's pointless to talk about savings. It's pointless to talk about expenses or to automate if we don't know how much money is coming in. It's going to play a vital role in our financial success. Now, if we do know what our income is, that's awesome. If you don't know, we need to talk. We need to. So if we do know what our income is, then we can move on to step two. Step two is savings. Saving money is the chief cornerstone to financial success. If you're not saving any money, you are going in complete circles. You're going in a constant cycle, which everyone refers to as paycheck to paycheck, because you're not saving any money. You are making just enough to cover your expenses, and that's it. Or worse, you're living above your means, above your income, and your expenses are actually outweighing your current income. So what do you do in that situation if your expenses are outweighing your income? What do you do? If that's your situation, we definitely need to talk. But if we take it to the saving side, we need to be saving and allocating. And I preach this to everyone, that we need to be paying ourselves first, saving at least 10% from every paycheck and putting it into one of three accounts, allocating it accordingly. Our emergency fund, our short-term fund, and our long-term savings accounts. Do you have those accounts? If not, why not? Because if you don't, you're setting yourself up for financial failure, guaranteed. So we need to be saving money. And like we said, if we're not saving money, that's just one of the trifecta. It's going to lead to us going further into debt. It's going to lead to us going further and damaging our credit even more. So we need to save at least 10%. Now, if we are doing so, then we need to consider step 3 and 4. That's our fixed expenses and our variable expenses. Let's take the first one. Fixed expenses, what are those? These are the expenses that stay the same month to month. They usually don't change in price or total. They're usually the same. So we're talking about rent, mortgage, car payments, minimum debt obligations, car insurance, memberships, things like that. These are the expenses that stay the same month to month. And 9 times out of 10, these fixed expenses are the ones that are necessities. They keep the lights on. Do you know what your fixed expenses are? You should know them off the top of your head, honestly. Because if you don't know what your expenses are, you're doomed to fail. How do you know how much income you need to bring in if you don't know what your expenses are? What happens if your fixed expenses, which are necessities, are overwhelming your income? How do you cover the difference? Most people, they use their credit card. They take out a loan, which is putting them further and further into debt. And if they're putting themselves further into debt, you can only use up to 30% of your credit limit. That's the credit utilization factor. If you're going beyond that, you're damaging your credit. So we see how these steps, they all correlate to each other. It's very important. If we take it back to the fixed expenses, I'm going to ask you a question. I'm going to ask you the same one on the business side of the discussion as well. It is the end of February right now. So you should, at this point, you should have your budget for March already set. You should have your projected income, your projected savings, and your projected expenses laid out. If you don't, we need to talk. But if you do, off the top of your head right now, what are your fixed expenses? What's the cost for March? You should know. I'll tell you mine, $3,258.67. I kid you not. You have to be on point. And it's so vital that we're on point with our personal finances, because the majority of us are entrepreneurs and small business owners. So if we don't know what's going on with our personal side, imagine what's going to happen to our business side. We've got to know these things. Now let's look at step 4. We're talking about our variable expenses. Now, variable expenses, these are the ones that they change, they vary. That could be groceries, that could be fuel, that can be going out to eat, getting coffee, going to the movies, things for pleasure. These variable expenses, and I see it all the time, the majority of the time, these variable expenses, most people don't track, and they're the reason we go over budget. We go over budget. And if we're going over budget, what does that mean? That means that our expenses are more than our income. And we already talked about what happens when that's the case. To cover the difference, we go further into debt. Ergo, damaging our credit. So we've got to keep track of our variable expenses. Now, here's another situation for you to consider. What are you going to do if your variable expenses in conjunction with your fixed expenses are overwhelming your income? What are you going to do? Have you ever been in that situation? Because if you have, it's very, very stressful. It is. And if that is your current situation, we need to talk. We need to set up a complimentary call, and we need to have a needs analysis to look at the numbers. We need to look at this and also look at the reasons why we're struggling to stay within our budget, to stay within our means. Because if we're going over budget, what's happening to our savings? We're not saving anything. We're spending it all on our expenses, and that's dangerous. That is very, very dangerous. So we need to keep track of our variable expenses. We need to talk about which ones can we completely eliminate, which expenses can we reduce, which ones can we do without. We need to have that conversation. And lastly, step 5, we need to talk about automation. We need to make this whole system, we need to make this whole framework as efficient as possible. Are we using an app? Are we using some kind of software? Do we have some system that helps us to have a bird's eye view of our total financial situation? We can see all of our accounts. If we don't, we are wasting time. And if we are wasting time, we already know we're wasting money. So we need to know, and we need to have some kind of system in place that helps us be as efficient as possible. It is vital, absolutely vital. But if you can follow this 5-step framework, you will be successful with your personal finances. It takes time, but you'll be successful. And if you find that you are struggling with any of the aforementioned situations, the savings, it's a challenge. The debt's building up. Our credit, it's not growing. It's going down. Then we need to have that complimentary call. We need to talk as soon as possible. Because being entrepreneurs, being small business owners, we need to be on top of our finances, both personally and business-wise. So let's move over to the business side of the conversation. Let's apply this same framework, because it does apply. Let's apply the same framework to our business. Step 1, what's our income? Well, that's our revenue. Are we tracking how much revenue we need to keep the lights on? And we're going to come back to that question, because that's going to be my question I mentioned earlier. But do we know how much revenue we need? Or are we keeping track of the actual revenue that's coming in? Or are we just winging it? Because if we're doing so, just like with the personal side, if we don't know what our income is, everything else falls apart. Guaranteed. We need to know what's coming into the business. Are you keeping track of that? If you are, then we can move on to step 2. And I have to tell you this, a fair warning. Step 2, saving as an entrepreneur, small business owner, it's a lot more difficult than it is saving on a personal side where you have a guaranteed paycheck working for another company. Why is that the case? Because we have to account for multiple different aspects of savings. Are you doing so? Is your business struggling to save money? Then we've got to figure that out. What are some of those aspects we need to look out for? We need to look out for, just like personal, our emergency, our short-term, our long-term savings funds. We need to look out for our retirement. We've got to save for retirement at some point. So we've got to consider that. If we have children, we want them to go to college, we have to save for that. Where's that money going to come from? Are we putting money aside for that? Are we putting money aside for taxes? What's our percentage that we need to put away each month? You should know that. If not, then we need to talk to a CPA. We need to talk to a professional that can help us figure out how much we need to set aside. But we need to be on point with that, because look what would happen if any of those basic areas failed. If I wasn't saving for my emergency fund and something happens, how am I going to cover that? I get in a car accident, I have to pay for a car repair. How am I going to cover that? Oh, I don't have the money. I'm going to use my credit card. I'm going to build my debt. I'm going to damage my credit. You see how it's all intertwined. What would happen if you don't save for retirement? You're going to be like everyone else, and everyone else is struggling, especially nowadays with their retirement funds. We have to be on top of that. If you don't save for your children to go to college, your children aren't going to college. They might, but you really want to leave that up to chance. You know how things are nowadays. So we need to make sure that we are saving money one way or another with the business. And that all stems from knowing how much we bring in with our revenue. Now, fixed expenses, if we look at step 3, what are fixed expenses? Well, for the personal side, we know that these are the expenses that keep the lights on. These are the normal payments to keep everything going, to keep us in our clothes, to keep us in our homes, to keep us moving month to month. These are our fixed expenses. What are your fixed expenses for your business? I asked you that for the personal side. I told you what mine was. So what was yours? And then for the business side, what are your business expenses? That number should instantly pop into your head at this moment. If there's any hesitation, any sign of doubt that we don't know what our business expenses are, we need to talk. I'll tell you mine, $226.54. No lie. I've got low overhead, but I still keep track of my business expenses. You have to. Because say, for instance, you don't. What happens on the personal side if we don't track our personal expenses? We could be going over. We could be spending more than we bring in. That puts us into more debt, more credit problems. What would happen with the business? If your expenses that you're not tracking are going more than your revenue, we're going to have a problem. You're going to put yourself into more debt, damage your credit. We see how they all have that correlation to each other. And if you don't know what your fixed expenses are, if you don't know what keeps the lights on, then how do you know what to charge your clients? How do you know what to charge your customers? How do you know that the current price you are charging your customers is enough to keep the business moving successfully? And most of us aren't in the business for just going in cycles, living paycheck to paycheck business-wise. We want our business to expand. We want our business to grow. We want to have some progress and some growth. That's why we work so hard consistently to make sure that the business is efficient and profitable. That's why we have these meetings every week. We want to make sure that the business succeeds. But if we don't know the basics, if we don't know our fixed expenses, that's not going to happen. We are doomed to fail. Hands down. You might have been getting away with it, but it won't last for too long. So we have to be on top of that. And then with our variable expenses, taking clients out to lunch, or if you are buying different items for the office, if you are in more of a labor side of the deal, if you have to buy consistent tools, we have to know what's going on with that. We have to keep track of our variable expenses. Because like with the personal side, guys, if our variable expenses are getting out of hand, that's going to throw off the rest of the budget. That's going to throw off the rest of the framework. We won't be able to save money. You guys know what happens next when we can't save money. Debt, credit. So we have to know what's going on with our variable expenses. It's so vital that we track these things. And if that's the situation, if we're in the situation, like I mentioned with the personal side, where if you're fixed and your variable expenses are overwhelming your revenue, overwhelming your income, what do? We've got to know which expenses to completely remove, reduce. We need to take some steps, because if that's the consistency, if that's a consistent pattern, expenses more than income, we're having a problem. We're going down. We just don't see it yet, but we're going down. So it's vital. And if that's your situation, let's talk. It won't hurt. Let's talk.
Thanks, Austin.
Oh,
Great job. I have a quick question, and then we'll take some other questions.
sure.
Quick question. So if somebody calls you and wants that complimentary session, will you start to teach them how to track their expenses, either personal or on the business side, to help them see what they need in order to move forward? Yeah,
first things first is that we need to look at the personal side. We need to understand what's going on with your personal situation, how you're managing your personal finances. Because if we can understand that, if we can get a handle on whatever situation is going that way, then we can easily tailor that to the business. So we've got to start at home first.
Okay, we can take questions. You can raise your hand and we'll take questions for Austin.
I have a question.
Tina, go ahead.
Is there any particular system that you like, any kind of application that you like the best, or is it just a simple spreadsheet?
Honestly, whatever is most comfortable. When I work with clients on their personal side of finances, I like to use different apps, like maybe You Need a Budget or using a spreadsheet. I like to start off with a spreadsheet first. Let's understand the budget first, then we can automate. But using Mint, even Quicken, those are pretty good pieces of software that at least help you to keep track of what's going on with the finances. Those are my top.
Rob?
Yeah, sorry if I missed it, Austin. A great information. Question on number 2 at the savings.
Sure.
You say 10% comes out for savings, and then you take that 10% and break it out, like you said, savings and then emergency in the third one. So it all comes out of that 10%?
All comes out of that 10%. Yep. So that 10%, and that's all based on, why we have to do that needs analysis, because we have to look at your goals that fall within the short-term and the long-term savings funds. So when you save that 10%, we've got to figure out the allocation of that 10%. That's just the standard. If we could save more, better, but that 10% needs to be broken up among our emergency, the short-term and the long-term.
Great, thank you.
Gotcha.
Stephanie?
And Austin, what do you recommend people have in savings for emergencies?
3 to 6 months worth of expenses saved up just in case. So that usually will vary because some people want 3 to 6 months of their current lifestyle, what their current expenses are. And others, if they did lose their source of employment, they might cut down. So they might have a reduced budget. So they want 3 to 6 months of that saved up. But either way, if we can do some kind of average, and that's what we'd have to look at together too. But we want to have 3 to 6 months worth of expenses saved up minimum. If it would take us longer to find another source of employment, then we've got to account for that time frame too. But minimum 3 to 6 months.
And do you also suggest additional funds for if they have an emergency with work or with their home?
Ideally, yeah. So you want to have that 3 to 6 to cover. If we are just strictly working for ourselves, then we need to accommodate for any extra emergencies that can happen. So you want to have enough money saved up for personal expenses if they pop up. If something happens with the business, we want to have savings allotted for that too, just in case.
Thank you.
Vern has his hand up.
Oh, there you are, Vern. Go ahead. There was so many people on here, it's hard to find everybody.
So do you have percentages for these other areas, these other 5 areas, or the other 3 areas?
The short term and long term. So it's based on your goals, honestly, because ideally we want to take that 10% savings and we're going to break that up into those 3 accounts. Now, how we break that up is based on your goals. Emergency fund always gets priority. No question about it. Emergency fund always gets priority. But the goals we have that are encapsulated in that short-term fund and the goals we have that are categorized in that long-term fund, that's going to figure out our distribution going forward. But we've got to list out those goals. We've got to figure out your needs, and then we can figure out exactly how we're going to allocate that 10%.
Vivian?
My question is with regards to liquidity. What would you suggest, or should your emergency fund be as liquid as possible, or and like what suggested areas in which you can keep those funds in case of an emergency?
Great question. Yeah, we definitely want to have that emergency fund liquid. We want to have it in a liquid savings account. So that could be a hot, if we're starting off and want to keep it simple, a high yield online savings account. That's a great spot. You get a better interest rate than a brick and mortar bank, and you can continuously contribute that money into that account. So, if I think I forgot the question. Actually, yeah, you want to have it as liquid as possible, because if an emergency does pop up, if I get in a car accident today and the repairs are due in 2 days and I got to pay up for that, I need an account that's going to give me that money in less than a week, 2 to 3 days at best. So that's why we want to have that in a liquid savings account, something we can easily access in case of an emergency. We know that with investment accounts and things like that, sometimes it can take a little bit longer to retrieve that money, but we need something quick. So something that we can access relatively quick, less than a week, that's definitely preferable.
So we got time for 1 or 2 more questions.
So would you say that it's not a good idea? Would you say it's a good idea? What if you do have your emergency liquid fund, but you have a credit card, or if you have it in a so-called not too liquid fund that you can pay with the credit card and then withdraw the money from these? Would you advise that, or not use credit cards at all?
I'm definitely not against. I'm not against credit cards at all. I think credit cards are definitely a great tool if they're used responsibly and used in moderation. They definitely should be used because you could leverage them for the perks and the benefits. It depends on the situation. If it is that immediate, then yeah, we want to be realistic. We want to use a credit card in that situation. But after we use that, following the same guidelines with using credit cards and using debt, we want to at least pay that balance off as soon as possible. So if we could pay using a credit card today and we could pay it off by the end of this week, that's awesome, as long as we're on track with it. But it just depends, it does depend on the situation, but if it can be put off, we'll do it that way. But if we have to use the credit card, it is what it is. We'll work with it.
All right. Thank you very much, Austin. Folks, if you are in that situation or you know anybody in that situation that needs help, get in touch with Austin. He's the man. Okay. Thank you, Austin. Moving on, we have our second speaker, Vivian London-Crooks. She was born on the beautiful island of St. Thomas, located in the U.S. Virgin Islands. She's the eldest of 3 siblings. She attended Atlantic Union College in South Lancaster, Massachusetts, graduating with a BS degree in accounting and a minor in economics in 1992. After graduation, she moved back to the Virgin Islands and held the position as a junior accountant at a local CPA firm. In 1995, she moved to New York in search of other career opportunities and accepted a position as staff accountant with the Albert Einstein College of Medicine, where she worked for over 6 years. In 2001, she was offered the opportunity to advance her career, and she accepted a position as senior accountant at Sumitomo Mitsui Banking Corp. While at the bank, she furthered her education and graduated with an MBA in finance in 2009. After 15 years of service, she left the bank, and in 2017, she followed her passion and desire to work for herself. She opened London's Tax Services LLC. Her passion is educating her clients and youth. She takes the time to show how to take permanent control of economic wellnesses. Her clients are taught how to realize their income potential, save on taxes, and see their investments grow now and in the future. She teaches small business owners the art of managing their bookkeeping and staying ahead of the game by avoiding the pitfalls of business ownership. I'd like to welcome Vivian London-Crooks.
Thank you, Jim. How much time do I have? It's 10 minutes?
No, you have about 20, depends whether you want 5 or 10 minutes for questions. It's a total of a half hour. So
okay.
Let's say 20 minutes to present and 10 minutes for questions.
Okay.
Give or take.
All right. Okay. I just want to set my timer. Okay. Good afternoon, everyone. And I want to say thank you to the leadership team of Master Networks for giving me this opportunity to give back to you, my Master Network family. I joined Master Networks in November of 2020 and would not have imagined that I would be sharing my experience and expertise with you to help you become financially intelligent in the area of taxes and bookkeeping. I am truly humbled by this opportunity, and I thank Jim and Tina and all the other Master Network leaders behind the scenes. When I read the book, Rich Dad, Poor Dad, Robert Kiyosaki mentioned 4 areas of financial development that resonated with me as a business owner. The 4 areas are accounting literacy, investments, real estate, and the law. When he mentioned the law, it resonated with me. So today I would like to expand a bit on it because knowing the law or hiring an expert in the area of tax law or business law helps you as the business owner be savvy and make decisions that would help you keep your asset column of your balance sheet growing in the positive direction. So today, I will just give you a small glimpse of how you can use some of the tax laws to help you grow your small business. I'm going to share my screen with you for the presentation.
Tina, I think you have to make her a co-host.
Okay, thank you. Okay. So today I will be briefly discussing steps to minimize heavy tax burdens, and it's all part of the tracking process. How to how does tax planning increase your savings? So the three areas I'm going to focus on is the tax benefits of business owners, the benefits of tax planning, and also I'm going to give you a short list. It's not all inclusive, but I'll give you an idea of what business tax deductions look like. Ways in which a business owner can save on their taxes. Now, as an employee, you pay taxes on your gross, and what is left is what you have to live on. But as a business owner, you have the advantage of getting your gross, having your expenses taken out, and then what is left, that is what you pay taxes on, if any. So as of 2018, just a little tidbit to share with you. In 2018, business owners can now carry forward losses indefinitely. Before, it was limited to 20 years. So that is a good thing. So if you incur a loss this year, then going until that loss is expired or exhausted, you can carry forward that loss. In addition to that, business owners also get something called the QBI, which is Qualified Business Expenses. And this is an additional 20% deduction that you can take on your tax return as a business owner versus a regular employee. And this is an addition to the other expenses that you already have as a deduction. Business owners can claim more expenses than an employee. Just to let you know, in 2018, the whole tax code was revamped. So a lot of things that regular owners were able to, not owners, regular people were, or individuals were able to deduct, they can't deduct them anymore. Things like the job related expenses, some of their travel, some of the supplies, the tools, it has been eliminated from the personal side. But you as a business owner is able to expense or deduct all of these types of expenses. Accurately tracking your income and expenses is key to savings. If you don't know what your bottom line is, how can you save? So being able to use tools such as Excel, QuickBooks, Quicken, whatever apps that helps you to track your income and expenses, you can know where you are at any given point in time, whether monthly, quarterly, yearly. You would know what your profit and loss statement looks like. And going back to what Austin says about tracking these things as a business owner is very crucial in order for you to know where to save and how to save. Preserving your wealth with tax planning. Now, tax planning considers the implications of one's personal or business or investment decisions. Tax planning helps to minimize your tax deferred liability, so therefore it frees up money for your investing. And who doesn't like to invest? I would prefer to be putting my money into investing rather than paying taxes. I oftentimes tell my clients who would want to pay more in taxes, I said, why are you putting more money into taxes? You can actually bump up your 401k, put the money there, because in the end, when you're looking to retire, the government is not going to give you back any money from taxes for you to live. So it's better that you put money into your investments rather than paying more taxes. There's a few areas in which you can minimize the amount of tax you can pay each year, such as, and this is just some of the suggestions, and I think Austin alluded to that earlier, putting aside money for your child's college saving plan. And I think Alan has a young child, it's 9 months old. Now is the time that you would want to start saving for that beautiful daughter of yours. Participate in a self-employed retirement saving plan if you don't have a regular 401k. There's tax savings on that. In being a part of that, you can get tax savings. Working for yourself and being able to deduct business expenses. Like I mentioned earlier, as a business owner, that's one of the perks that you do have. I just want to share with you, you can have, this is a not all-inclusive business tax checklist. And we can see on the left side, we have our income. These are the types of income that you may have, whether you're in sales or you service or you are a product provider. On the right side, we have expenses, and these expenses vary from industry. So you have things like advertising, depreciation, business insurance, bookkeeping services, home office expenses that you're able to deduct. I just want to just plug in a little quick note that sometimes a lot of people don't realize that when you lease a vehicle, the lease payments are actually fully deductible. If you finance that vehicle, you're not able to deduct the payments that you make each month, because you'll be able to, the other side is that you'll be able to fully, well, depreciate that vehicle instead of taking the payments each month. So just a little tidbit for you. I just also want to share, my presentation is not that long, but I just want to just share with you two things with regards to one of the expenses a lot of us may be aware of and heard of with regards to meals and entertainment. Now, we have where meals are still deductible at 50%. It's not deductible at 100% under normal circumstances. But if you have an employer that provides these services or meals to the public, it then becomes 100% deductible. If you're in the industry of commercial vehicles, you have employees that you have to feed or you have to provide meals for, those meals are 100% deductible. Another area of savings is opening or having an Escort versus, and people have their different reasons too, but just to give you the pros and the cons, having an LLC versus an Escort. So an Escort with an LLC, you are still responsible for paying something called self-employment income, or taxes, I should say. That is basically your contribution to the Social Security system. That's not federal taxes. You're contributing to the Social Security system. So as an LLC, you're responsible for self-employment taxes. And when you file your tax return, that is calculated. That's one of the downsides of an LLC. For an S-Corp does not pay taxes as an entity, like, for example, an LLC, because it's a pass-through entity. So as the entity itself, you have your income and expenses, and it does not pay taxes, but it's passed through to the members or the shareholders of that corporation, of the S corporation. So if there's a profit that was made that year, then that profit is passed on to that one member who owns the company. Or if you have up to 100 members, that profit is split among all the 100 or 50 or 20 members that belong to that S corporation. And the same likewise with losses. Losses are also distributed among your members. So I think that's the end. I think I'm finished. And I'm open to any questions that anyone would like to have. Let me stop sharing. Any questions that anyone would like to have?
Vivian, great presentation. I'll just say that I take advantage of that S-Corp thing. So definitely listen to Vivian. I'll endorse that. Running your company. I'm horrible with finances. So it's one of those things where, I was listening in pain as Austin James was like, if you're responsible with your credit card. And I'm like, that's not me. And I will not use that credit card because I know where I'm going, because I've been down that path, right? I'm not going to do that, right? I'm going to operate on a cash basis because I'll get myself in trouble if I'm, thinking that I'll pay that credit card back later. No, I won't, right? So with the S-Corp, it allows me to pay myself, and it, once you have that revenue built up, which, over time I did with Tilth Event Staffing, it allows me to control and know what I'm getting paid on a weekly basis for my own personal budgeting. So I thought that was great advice that people should listen to. Thanks.
Awesome.
Susan, you had a question? Unmute yourself.
Okay, there you go. Hi, Vivian. Very interesting. Thank you. I have a question. I am a wellness partner in a network marketing business called Amari Global. And as part of my requirement, I need to purchase, 100 PV of product every month. Is that a deduction?
Absolutely. Anything, the question that I always tell my clients, you ask yourself, is this going to promote my business? Do I need it to operate my business? Once the answer is yes, it's a deduction.
Okay, so I basically get all my supplements for free then. I like that. Thank you so much.
Other
You're welcome.
questions? Anybody? Rob?
Yes, great presentation, Vivian. I noticed in the end there, you talked about leasing a car, and that is completely deductible, but I assume that's only for 100% business use. I could never commingle that with my personal use, right? It's not broken
Absolutely.
down.
Yes. We were talking about business expenses. Yes.
Right. Okay. Thank you.
Yes. No commingling. That is highly frowned upon with the IRS. So if you need to open a business account for your business, you need to do so as soon as possible. Except if you're a startup business, in the first year, you can, use your personal, because you need funds in order to start your business. And where is the funds coming from? So you can use that to start up your business. But once things is up and going, we need to open a business checking, business savings, business credit card, because I've had it over and over. When the IRS writes you and asks you to prove your numbers, and you're like, oh yes, I can highlight off of my personal. No, it's thrown out.
Thank you.
You're welcome.
Jim, I don't know if Vern still has his hand up from before, or Vern, do you have something?
Hand up.
I think
You're
you're
on mute, Vern.
I think he's gonna take it off.
Yeah, that was an error on my part. I'm sorry.
No problem.
One of the things I find in my consulting practice is one of the scariest things, and both Austin and Vivian addressed this, is the idea of my first question I'll ask a business owner is, do you know what it costs to turn on the lights and operate your business? And unfortunately, and both of them were highlighting it, most business owners can't answer that question. That's a very scary thought.
So if they start today.
Start today. Get in touch with Austin. Get in touch with Vivian. They will help you to get the most out of the money that you're making. Any other questions before we move on to Julia?
Susan had another one, I think.
You have another one, Susan? Go ahead.
Again, this is a deduction question. So if, like, I met with, is it Cindy Mintz, who has a skincare line that might be very relevant for the clients I work with. If I sample her line as a sample and use it myself to see if it's a good product that I could recommend, is that a deduction or not?
Well, if no cash is exchanged, then it's not an immediate deduction. Now, if you go into, there's something called like you're bartering, her services for yours, then that's a whole different, where you would actually price out what the value is of her products. But if initially there's no cash exchange or no, then it won't be. It was more like a promotion.
Right. No, but what I mean, like, if I was going to say, if I bought like her eye cream to try it, can I deduct the cost of that eye cream as a business expense because I've tried it to see if it's something that could be useful
for your clients? Definitely, yes.
Okay.
As long as it is going towards for your customers, definitely.
Okay.
Vivian, wouldn't that have to be out of a business account and not a
Yes.
Any other questions? Great, thank you, Vivian. By all means, get in touch with Vivian. She knows what she's talking about. So moving on to our final speaker of the day is Julia Moore. She was born and raised in Philadelphia, and she breathes the spirit of brotherly love into her Mount Kisco insurance agency every day. With nearly 10 years experience in the insurance industry, she has the expertise to take a consultative approach with her clients, who she views as her partners. After starting her own agency in 2015, she found a passion in modern day entrepreneurship and will help you navigate the ebbs and flows of business, grow and expand in a solid way where you can feel protected and empowered. What I know about Julia, she is a master of tracking activities. Julia.
Thanks so much, Jim. Yeah, tracking. So I also want to start off and thank Tina. I want to give a big shout out. I don't get to thank you enough publicly and outside of our chapter, but I've known Tina since I moved to New York 6 years ago, and she was at my grand opening for my agency and has always been there for every single thing. And I know other members in Master Networks have had that same feeling. So Tina, without you, we won't all be here. So thank you for this opportunity. I really appreciate that. And furthermore, I also want to thank all of the leadership that she has with her. So specifically, Jim, for organizing this. This was great the way that you put this together. And all of your area directors, we have Sammy, Coach Glow, Maggie, Jason, Rick, and Rob. Thank you guys. I know how much goes on behind the scenes, and this is really great. So thanks. For those of you who don't know me, I'm Julia Moore, and I'm going to share my screen, and I want to talk to you about tracking today. So all right, so can everyone see that? Give me a thumbs up. Awesome. Okay, so I'm going to talk to you today about return on investment and tracking your business. And I think before I do that, I should probably validate who I am a little bit so that you know who you're taking this information from. My name is Julia Moore again. I am the CEO and founder of J. Moore Insurance Agency in Mount Kisco. I came up here 6 years ago and started my insurance agency from scratch. And we have had about 125% growth every year on average, some years more, some years less. And I really couldn't have done that without Tina, like I was saying. Master Networks has been a huge part of that. And with that said, was one of the original founders of the Yorktown chapter of Master Networks. And we were able to grow, and we actually had 11 chapters start from members who were in our chapter. So I love that, and I'm all about that. So Master Networks is huge for us, and I'm very invested in the success of all business owners, and especially you guys, because I know how dedicated you are. In my day job, I sell insurance to home and car insurance to families. And I do a lot of business insurance as well. So that's what I do every single day. I have been told by my friends and my family that I'm an old soul. And so I also just recently launched my passion project, which is Spring Lane & Co., which is basically my collection of old things and antiques that I am now selling on Etsy. So I have some experience in insurance, and now I have a new business that I'm starting that is for fun. So I am with you on that journey if you are in the beginning. Yes, I'm from Philly, and I like all the Philly sports, and the best cheesesteak in Philly is D'Alessandro's. So you can tell me otherwise, but you'll never win me over. I love the beach over the mountains, and I have a sidekick who is my dog. So I'm a dog person too. So that's a little bit about me. And the other thing about me in business is that I am a tracker. I have gotten this reputation for being a tracking fanatic. Some people call it obsessive. I call it business. And, I think the reason why I'm such a tracker is because I have a lot of questions about my business. And maybe that's like you too, where you're wondering, we listened to great presentations today by Austin and Vivian, where we're talking about my income, my expenses. Here's how to really make my taxes work for me. But the question that all of us entrepreneurs have is, where is my income coming from? And how do I know? How do I know how much money I'm going to make? Well, my objective for you today is that I want to give you more control over that. And that's through tracking. So here's some of the questions that I think that I've asked for myself. And what I do is I take my questions and I see what I can answer for myself with the information that I have. So I also think a big part of this is what your time is worth. So if you see that diamond on the end, That's the entrepreneur's golden question. And not that I live and die by that, but I think it's so important to understand the value of what you do every day and the value of every free hour that you have. So let's just get started. So if you're overwhelmed by tracking, I want to just stop you. And I want to tell you that it's okay, because it is overwhelming and there's so many things to track. So I just want you to list your questions down. And in the chat today, I put a link. So everyone on this call, I will give you an hour of my time for you, really as a thank you for being here and investing in your business. So I will sit with you and help set you up with tracking just for you. It has nothing to do with me. I just want you to be able to succeed. So they're your numbers. You probably already have a lot of this information. So for instance, you know right now who your customers are. You probably, even if you have not tracked it, can figure out where they came from. And if not, ask them. You know who your prospects are, and you probably definitely know where those prospects came from. So you already have some really, really good information. And I'm going to go ahead and keep moving along here. And I just want you to realize that start where you are. And if you are using a program that feels overwhelming for tracking, stop using it and just use something that works for you, that feels easy. Because if it's too hard to track, you're not going to track. So make it easy for yourself. So here's what you have. You have all of this information, and there's some big scary words on here like close ratio and revenue by product and your hourly rate, return on investment. We're going to dive into that and make it real for you so that it makes sense and you can figure out how to apply that. And I also want to set the tone for you as we're going through this to think of your own business questions. And also, when you're listening to me today, I really want you to put it into perspective. This is just information, and you have to realize and recognize what your objective is for what it is you're tracking. So I like to think that there's 5 things that you would want to track or have goals around, right? So you would want to have goals around income, money, so sales growth, number of clients, that's different. So you could have 100 clients that pay you $100, but that's 100 people that could give you referrals, right? So number of clients is a different track. Relationship. So if the objective of an activity is to build a relationship, how do you figure that one out? And then branding. When you are doing something for your brand, it may have less to do with numbers. So for instance, this presentation today has everything to do with my brand. I really do care about entrepreneurship. I really do care about having other business owners be successful with me, because I like being around good company and I like to be inspired. So truly, that's value, right? That's branding. That's who I am. So keep that in mind as we keep moving, because I am going to get super analytical and put some math problems on you, but at least it's pink and blue. So hopefully it's pretty for you. So I think a good place to start is where your business is coming from. And I'm going to use master networks as an example because it's common ground for all of us. And I think we can all make sense of it. And you can figure this out right now, even if you don't have all the answers. And don't worry about being perfect. Figure it out, right? Figure out, even if people said no to you, where did they come from? That's perfectly good information. So I even track my no's. I even track my not nows, because it's invaluable to understand. If I'm doing marketing on Google and I get 97 no's and I get 3 yeses, my return is very low, right? So the no's are just as valuable as the yeses. So where's my business coming from? Use a chart, make it pretty for yourself, or make it visually appealing. So you stick it on your wall and say, okay, here's where it's coming from. Now, why does this matter? Why does this matter? So look at this one here. In this example, your referral partners. And maybe that's not one person. Maybe that's 8 people. But maybe you're an insurance agent and mortgage brokers give you a ton of business. Maybe you have 4 mortgage brokers and they each give you 10 deals a year. That's 40 pieces of business, right? But what if you could leverage relationships and have 8 mortgage brokers in your circle, each giving you 10? Now you double that without doing much work, but you understand where it's coming from, so you can focus there. Same with Master Networks. Master Networks, I like to say, is the long game. But if you look, there's opportunities here from so many different things. So what can you do to bring value to your membership in Master Networks so that it can work for you even more? So can you join a leadership team? Can you do presentations? Can you get involved in any way? Do more face-to-faces? So there's ways to breathe life into those things and feed the beast. So when you have a large referral source of any kind, feed it and make it easier for yourself. So you can hit all of your goals very easily if you just feed the beast. All right, so now we're going to get into the nuts and bolts. Close ratio. This just means how many shots do you have to make before you make the basket, right? So number of clients over the times you made the pitch. It's very simple. How many meetings did you have to go on before you had one referral? How many Google ads did you have to have before you had one phone call? So if you have 100 clients and you pitch 500 times, your close ratio is 20%. For every 5 pitches, you get 2 clients. Or, yeah, 20%. 1 out of 5 you're getting. So I like to use this and break it down by each of my marketing initiatives. And you can really do this for anything, but I'll do it for like Master Networks versus my referral partners versus Google ads. So you can break it down and see, is this marketing really working for me? But that's just based on the sale. That has nothing to do with the opportunity. So we're going to talk a little bit more about that in a minute, but I want to get into this other piece first. So your real hourly rate. We talk a lot about what your time is worth, and you can have an hourly rate for your customers, but that's your product, right? So if you're giving an hourly rate to them, this is really what it's costing you out of last year. So if you made $100,000 last year and you worked 50 hours a week for 50 weeks, meaning that you gave yourself 2 weeks vacation, you made $40 an hour last year. Why is that important to know? It's important because that's truly what your time was worth in the past. And it's good to understand the amount of effort that you put in based on your activity so that you can adjust accordingly for the next equation. So I really like to look at your real hourly rate as something in the past, and I don't focus on it too much. I like to focus on it when I know that I'm spending my time the wrong way, but I don't focus on this one too much. So let's look at the one that I do focus my time on, and that's going to be the cost of your time. You have a goal now. So yeah, sure, I made this much money, I work this many hours, we're business owners, we work really hard, and that's okay. But what is the cost of your time next year? So if you're looking to make $150,000 of income and work less, so you only want to work 35 hours a week for 48 weeks, that means you have 5 weeks vacation. Now the cost of your time is $90 per hour. And I don't want you to look at this cost like I'm going to start saying no to everything, or this is my reason why I'm going to say no to a goal or a marketing activity. I want you to use this when you need to analyze it and look at the long game. So this is your opportunity in the future. So you making $150,000, working this much, this is the true number, right? So I like to use this because it helps me make sense of certain marketing activities that I do that may not in line with my goals today. So there's different pieces. And I do want to talk about opportunity cost as well before we get into the next section, which is going to be return on investment. So this is the real mathematical equation for your return on investment. If you Google it, this is what you're going to get. And I do include cost of my time in this when I'm looking at my numbers. But we're not talking about opportunity. So if you think about time is something that is, it's not tangible. So you meet with somebody in Master Networks for an hour and you take an hour every single week to go to your meeting. You're spending 2 hours a week, every single week. And that doesn't mean that you're entitled to a referral. That doesn't mean that you're entitled to a piece of business. What it does do for you is it sets you up for 6 months, a year, when somebody is in a conversation somewhere and they say, oh yeah, Julia does that. And you know what? I've seen her for a long time. So you're making opportunities. When I'm sitting here in this meeting today, sharing with you the way that I think about business and my perspective about business, I don't do this because I want a return today. I do this because one day, maybe you're sitting with a business client and you said, oh yeah, Julia gave this presentation, and maybe you'll think of me. And that's truly the reason I do this. It's value, I have it, and that's it. I want to give it away because it's an opportunity that you'll think of me because I made an impact on you and your business. And that's really the end of it. And so you can't really measure the opportunity. And Master Networks gives us a lot of opportunities, including public speaking. I've never taken public speaking classes. I'm not a part of a public speaking group, but I sure do it a lot now. And I've been in leadership all different kinds of ways. I've been in every leadership position in Master Networks and probably out of Master Networks possible, but it gives me a lot of experience. It also helps me to be on the ground. I have been doing and selling insurance for 10 years. When someone gets into a car accident, it is really, really hard for me sometimes to remember how traumatic the smallest scratch on the car is. But doing these types of opportunities and being able to meet with people and have real conversations helps to keep me grounded that way and keeps the questions relevant in your head. So opportunity cost is really huge, but that doesn't mean that the tangible numbers don't matter. So look at your return on investment, net profit over investment, times it by 100, and that's your return. So let's look at a real example. So if your cost of Master Networks is $480 a year, that's $50 a month, and your sales is $15,000. Let's pretend like this is a projection for the future, since we're going to be using a calculation below. Your cost, and then you're attending your meeting 1 hour a week. You're doing the bare minimum. The cost of your time is $90 per hour times 1 hour a week, and you're at $4,500. So add all your costs together. Your $480 cost and your $4,500 time cost, and you're at $4,980. So your profit is $10,000, pretty much $10,000. So your return is 200%. This is how you can look at every activity that you do. So if you do a marketing campaign and, in a year you get a $100,000 client, great. Was that the return you needed? Maybe it wasn't yesterday, but it's today. And I use this even today. Right now my agency's in a sales contest for one of my carriers. It started on Monday and we hit 2 of the benchmarks on Monday. That wasn't by accident. That was because I used my numbers, I used my tracking, and I said, here's what we got to do. 1, 2, 3. And it was over. Not that sales is not hard. It is, and it takes effort, but it sure made it a lot easier to weed out the noise. So this is why I'm passionate about tracking. And I am going to stop here and say thank you for listening to me. And I'll take questions now if you guys have any questions. All right, any questions?
Okay, thank you very much, Julia. Great job. Does anybody have any questions? Please raise your hand. There's no, Cameron, and then Rob.
I was going to say, in terms of, first of all, well done on the slides. In terms of mapping out, what you want your income to be, how do you, I don't know if you mentioned it during your presentation, but how do you track it? You said how you set it up and how you want it, but how do you track that over time?
Yeah, so I think that you have to figure out what you're tracking. And then you can use Excel, you can use a management system, you can use Salesforce, but find something that's not overwhelming to you and figure out what it is that you need. And like I said, if you need help figuring that out, it kind of comes naturally to me. So I'm happy to sit with you and work with you. So just that link is in the chat. So I can kind of help you get granular on that, because it's a harder thing than just 1, 2, 3.
Definitely. I grabbed a screenshot of it and I loved it from both a teaching me and then, basically being able to turn around and give that to somebody else. I thought that was great. Thank you.
Great, thank you.
Rob,
Yeah, I don't have a question, Julie, but it was great info. I love that you said the tracking comes out of the questions you have about your business. So I just want to thank you for today. And I've already booked on your calendar to talk about this because this stuff, I've grown to really love it, but I don't really understand it. So thank you.
Oh, good. I'm glad. I'll help you.
Same here. Same here, Julia. It's like I'm stuck. I know what I need to do, so I just pull up your calendar. I'll be making an appointment.
Okay, good. Yeah, we'll make it all about you. Great. Any other questions?
Tina.
I have more of a comment. So to watch Julia grow this business over the last 6 years, Julia and I just did I think it was that on Monday, Julia? Gosh, the time.
Yeah,
has gone by.
I know. The week.
I just interviewed her about her business. It's on our YouTube channel, and which is Master Networks New York region. And so I just was interviewing her about this business and how she grew. And, it's not surprising that she got the 914 Westchester Magazine Wonderkins Award for 40 under 40, right? And I have to just tell you, so that's the kind of personality that I'm just so proud of you. I think of Julia like a daughter, and I can't help it, just like everybody. I feel like you're all my family, but this is the kind of thing where she's a servant leadership, right? She's always giving, and you taking her up with this will truly be about you, because that's what she does. And so I just can't thank her enough. I'm just glad, Julia, I know you were so busy over the last couple of years. I feel like you're coming back out again and getting people around these groups to get to know you a little bit more. And that's what I really am excited about, because I know how much you can be helpful to other entrepreneurs. So you're amazing. Thank you, dear.
Well, thank you. And honestly, Tina, that's talking about tracking. Luckily for me, Karen Trendell's on this call, but she has a lot of experience. And part of the reason that you have to back off is that you need to hire. And I had to do that. And I had to get in the mindset for that. And part of that was a lot of number crunching. And Karen kind of helped me on the emotional side. So, and also like the mindset side. So that's also the power of Master Networks. And that's why I mean it. Like I had a lot of people help me along the way, and I just want to keep sharing it because that's the way that I can thank those individuals. So
yeah, and Karen, you are amazing. And if you haven't known Karen yet, that's another person that actually all of you need to connect. But that's another direction to go. And then, of course, the rest of this wonderful group.
Yeah, I'll pay you both later. Thanks.
No problem. I'll take it in wine.
You got it.
So as you can see, there are an awful lot of very, very talented people in this organization and in this room right now. I encourage each and every one of you to schedule a face-to-face with each other, because as Tina always says, that's the secret sauce. I know Tina has at 4:30 this afternoon, and every Thursday afternoon at 4:30 in this same Zoom room, you get the opportunity to have 2 face-to-faces. If you're not doing face-to-faces, you're absolutely not going to get the returns that Julia was talking about in her presentation. If you want an ROI from your membership to Master Networks, you have to be scheduling face-to-faces. Think about it. Every week in your meeting, you get to do a 30-second or a 45-second soundbite. If you think that anybody's going to buy from you or buy you in a 30 or 45-second commercial, not going to happen. I don't care if you're the best salesperson out there. It's not going to happen. You need to get to know people on a more individual basis. As Jeffrey Gitomer says, you buy from people that you know, you like, and you trust. You have to be able to do that.
And
Sammy,
Sammy has her hand up.
I'm sorry, Sammy, go ahead.
No worries. I just wanted to say that this is a gentle reminder for everyone to see that people are more than just who they are in their seats in a chapter. So as you could tell, Julia is in insurance, and she talked a lot about that, but she's also a guru on tracking. So just another endorsement to have those face-to-faces and really get to know the people in Master Networks, because there are so many resources within. So great job presenting, everyone. You guys are amazing.
Yeah, I just want to say, so thank you again to all of our, if you're interested in speaking and presenting and doing things, please speak to Jim Sandler. He's our advisor on education and training. If you want to just talk to me, please text me. Tell me who you are. I get a lot of texts, call me, and I'm like, who is this? So text me if you need me to try to set something up. But more importantly, just remember, everything about Master Networks is to try to get you guys to talk to each other. That's it. You can see that's our initiative. And what that means is the talking to each other creates the trust. The speed of the trust is the speed of the referral. And I'll leave it at that. Okay. Thank you all.
So thank everybody for coming. We're ending a little bit earlier, but thank you everybody for coming. And hopefully you enjoyed it. And we look forward to seeing you in 3 months when we do our next regional workshop.
Yes, and that one is going to be on, we're going to be doing timing. So we'll be looking for people to speak on timing, calendars, time blocking, all of that thing. Some practical information would be appreciated, especially from me. Thank you, everybody.
Thank you to all the speakers and to the leadership. Thank you.